Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast, episode 118, titled Impact, Solar and ESG Stock Buys. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 4 article links below that time didn't allow me to review them here. This first article lists 3 stocks. It says are for long-term sustainable investor. The title, Building a Sustainable Portfolio, 3 ESG Stocks to Buy and Hold, is by Josh Enomoto and found on investorplace.com. Here's some of what Mr. Enomoto says about his picks. 1. Iron Mountain, an enterprise information management services firm. Iron Mountain focuses on records management and data backup and recovery services, according to Investors Business Daily. Iron Mountain ranks as number 50 on its list of 100 best ESG companies of 2023. In particular, the information management specialist seeks to achieve net zero emissions by 2040. Analysts rate shares a unanimous strong buy with a $67.20 price target. 2 is Intuit. Intuit can mitigate our pain through tax-related financial software. And it turns out people appreciate Intuit for another reason. It's one of the ESG stocks to buy and hold. Per IBD, the software specialist places as number 58 on the top 100 conscientious companies for this year. Analysts peg Intuit as a strong buy with a $580.41 price target. 3 is Clean Harbors. A provider of environmental and industrial services, shares have soared robustly higher since the beginning of this year. Per its public profile, Clean Harbors focuses on myriad services, including hazardous waste disposal for companies, small waste generators, and government agencies. Clean Harbors slots in the number 39 spot on IBD's top 100 conscientious companies. Analysts rate Clean Harbors a consensus moderate buy with an average price target of $186.57. End quotes. My second article is unusual, and you'll see why in a moment. It's titled, "These 5 Small Cap Impact Stocks Are Making Social Change," written by Ari Zoldan and found on MarketBeat.com. Now, some of what Mr. Zoldan says about the stocks that are specifically publicly listed. 1. Vision Marine Technologies. The company offers electric outboard motors for boats. Vision Marine enjoys a first-mover advantage, as its E-Motion outboard motor, announced at the Paris Boat Show in December 2022, is the only turnkey solution available to boat manufacturers. 2. Ideal Power. The company offers a proprietary semiconductor switch that's much more energy efficient than most other offerings on the market. It offers significant benefits to energy-efficient devices and products, electric vehicles and EV charging, green energy and energy storage, utility infrastructure, and data centers. 3 is Verde Bioresins. Verde Bioresins is expected to go public via merger with a special purpose acquisition company, so-called SPAC. The company, TLGY Acquisition Corp., is trading under the ticker TLGY, but after the merger, its name will change and Verde Bioresins will trade under the ticker VRDE. Verde's polyethylene bioresin is a high-performance alternative to many petroleum-based plastics. The company estimates the total addressable market for its product at around $300 billion, or roughly half of the total market for petroleum-based plastics. 4 is Dragonfly. Although it might seem like drones have only been around for the last 5 to 10 years, Dragonfly has been in the business for over 20 years. Today, drones have many uses across multiple industries, including humanitarian efforts, public health and safety, military and government, environmental and energy-related industries, agriculture, and insurance. As a result, Dragonfly's offerings present dozens of potential social impacts. End quotes. And now back to our familiar clean energy theme with this article titled 3 Clean Energy Stocks That Can Survive Anything. It's by Tarek Torres and found on investorplace.com. Here's some quotes by Mr. Torres from his article on his recommended stocks. 1. Brookfield Renewable Partners is one of the largest renewable power companies in the world. Its portfolio boasts over 21,000 megawatts of capacity across hydroelectric, wind, solar, and storage facilities. The company is majority owned by Brookfield Asset Management, an alternative investment manager equity firm. High interest rates have negatively impacted Brookfield Renewable Partners' near-term share price growth. However, as clean energy stocks come back into favor, buying Brookfield Renewable Partners is a smart move. 2. First Solar. A number of earnings beats throughout 2023 should keep First Solar on clean energy investors' watch lists. First Solar announced a new manufacturing site in the U.S., adding to manufacturing capacity. First Solar could see its intrinsic growth rate boosted in the long term. 3. Ormat Technologies primarily engages in the geothermal and recovered energy power business in the U.S., Indonesia, Kenya, Turkey, Chile, Guadeloupe, Guatemala, Ethiopia, and Honduras. Last year, Ormat derived approximately 86% revenue from generating electricity through its geothermal plants and recovered energy-based power plants. With valuation multiples essentially halved since January, Ormat looks like an attractive investment opportunity. End quotes. With so many solar stocks down, this article might add some light to the gloom. It's titled 11 Most Undervalued Solar Stocks to Buy According to Hedge Funds. I found it on finance.yahoo.com and it's by Hamna Asim. Here's some quotes from his article. We made an extensive list of the most popularly traded solar stocks and shortlisted 11 stocks with PE ratios under 35 and the highest hedge fund sentiment. While some PE ratios might seem high, they are lower than the green and renewable industry average PE of 83, which was calculated by NYU Stern. We have assessed the hedge fund sentiment from Insider Monkey's database of 910 elite hedge funds tracked as of the end of the second quarter of 2023. Note, PE ratios are as of November 2nd. Starting number 11, Herein Group Limited. Number of hedge fund holders 10, PE ratio 25.25. Herein Group specializes in the development, construction, and operation of solar energy initiatives. The company is involved in the creation of community solar installations and the sale of project rights worldwide. 10. Jinko Solar Holding Company Limited. Hedge fund holders 12. PE ratio 3.19. Jinko Solar is involved in the design, production, and marketing of photovoltaic products, including solar modules, silicon wafers, solar cells, silicon materials, and silicon ingots. 9. Canadian Solar Inc. Hedge fund holders 16, PE ratio 3.51. Canadian Solar is engaged in the creation, development, production, and sale of solar materials and battery storage items worldwide. On October 30th, the company said that it intends to invest $800 million in constructing a solar photovoltaic cell manufacturing facility in Jeffersonville, Indiana. 8. SunPower Corporation. Hedge fund holders 17. PE ratio 10.24. SunPower Corporation is a solar technology and energy services provider offering solar, storage, and home energy solutions in the United States and Canada. The company offers post-installation monitoring and maintenance services, catering to homeowners and new home builders. 7. Dayco New Energy Corp. Hedge fund holders 22. PE ratio 2.05. Dayco New Energy produces and distributes polysilicon to manufacturers of photovoltaic products in China. This polysilicon is utilized in the production of ingots, wafers, cells, and modules for solar energy applications. 6. Shoals Technologies Group, Inc. Hedge fund holders 24. PE ratio 14.87. Shoals Technologies offers electrical balance of system (EBOS) solutions and components for solar, battery energy, and electric vehicle charging applications in the United States. On October 11, Goldman Sachs upgraded Shoals Technology to a buy rating with a $28 price target. 5. Sunrun Inc. Hedge fund holders 24. PE ratio 23.62. Sunrun specializes in residential solar energy solutions in the United States, including design, installation, sales, ownership, and maintenance. 4. Clearway Energy Inc. Hedge fund holders 29. PE ratio 32.62. Clearway Energy is a renewable energy company in the United States operating through conventional renewables and thermal segments. The company manages wind and solar generation projects as well as natural gas generation facilities. 3. Array Technologies Inc. Hedge fund holders 32. PE ratio 34.04. Array Technologies manufactures and markets ground-mounted tracking systems utilized in solar energy initiatives worldwide, including the United States, Spain, Brazil, and Australia. On September 19th, Bank of America included Array Technologies in its US 1 list and maintained a buy rating with a $30 price target. 2. Enphase Energy Inc. Hedge fund holders 50. PE ratio 19.5. Enphase Energy creates, manufactures, and sells home energy solutions for the solar industry in the United States and internationally. The company provides semiconductor-based microinverters that operate at the individual solar module level, along with proprietary networking and software for energy monitoring and control. And 1, NextEra Energy Inc. Hedge fund holders 59. PE ratio 15.88. NextEra Energy produces, transmits, and distributes electricity in North America. They generate power from different sources, including wind, solar, nuclear, coal, and natural gas. NextEra Energy develops and manages long-term contracted assets involving clean energy solutions like renewable facilities, battery storage projects, and electric transmission. End quotes. And more on clean energy stocks with this article titled 3 Renewable Energy Stocks Set to Beat Q3 Earnings Estimates by Aparita Dutta of Zacks, but found on Nasdaq.com. Now some quotes from her article. We are focusing on stocks that have the combination of a positive earnings ESP and a Zacks ranked number 1, strong buy, 2, buy, or 3, hold. Earnings ESP provides the percentage difference between the most accurate estimate and the Zacks consensus estimate. Starting number 1, Constellation Energy. It is the nation's largest producer of carbon-free energy and a leading supplier of energy products and services. The company has an earnings ESP of plus 1.36% and is Zacks ranked number 1. 2. Enlight Renewable Energy. It provides a renewable energy platform that develops, finances, constructs, owns and operates utility-scale renewable energy projects. The company has an earnings ESP of plus 22.22% and a Zacks ranked number 2. 3 is TC Energy. It is a premier energy infrastructure provider in North America. In September 2023, the company announced the successful completion of the Bruce Power's major component replacement unit number 6, which fully returned to service, thereby surpassing a significant milestone in Ontario's largest clean energy initiative. We may expect this to have favorably contributed to TC Energy's third quarter results. The company has an earnings ESP of plus 0.37% and a Zacks rank number 3. End quotes. Now some other honourable mentions, not in any order. Of course, we didn't have time to cover these in this podcast. 1. Title: Top 10 Renewable Energy Companies in the USA on energydigital.com by Charlie King. 2. Title: Canada's Technology Fast 50 Program on Deloitte.com by Deloitte. 3. Title: Renewable energy stocks got crushed in 2023. 3 top stocks you won't regret buying on the dip on Fool.com by Jason Hall, Tyler Crow, and Matthew DeLallo. 4. Title: This is the best solar stock, but is it a no-brainer buy right now? On Fool.com by Jason Hall and Tyler Crow. Well, these are my top news stories with their stock and fund tips for this podcast titled Impact, Solar and ESG Stock Buys. Now please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these very troubled times. Contact me if you have any questions. Thank you for listening. And again, please look at my new totally revised website at investingforthesoul.com. Tell me what you think. Talk to you next on December 1st. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.